Learners of managerial skills. Today I would like to talk to you on an extremely important topic called financial statements. I believe for every manager to succeed in his career, he must understand the importance of finance. I would like to talk to you first about three words. One is P&L, second is balance sheet, third is cash flow. P&L is a statement which tells you surplus of income over expenses during a period of time, whereas balance sheet is summary of financial status, what an organization owns or owes as on a particular date, whereas cash flow statement tells you what kind of cash has come in and what kind of cash has come out to pay somebody. These are the three most important financial statements: P&L, balance sheet and cash flow. In balance sheet, since it tells you what you own and what you owe as on a particular date, what you own is called an asset and what you owe is called a liability. Now, there are assets which are called fixed assets, there are assets called current assets. Fixed assets are basically land, building, plant and machinery, whereas current assets are bank balances, advances, all those. Whereas liabilities are current liabilities like creditors, like what you have to pay to the bank, or a long-term liability in terms of loans. Also the equity and reserves. Now there certain ratios are calculated from the financial statements. For example, how much profit you made compared to sales. Profit before tax to sales or profit after tax to sales is called profitability ratios. Second ratio is the structural ratios. How much debt you have got compared to the equity and reserves. That is a debt to equity ratio. Third one is called liquidity ratio. Current assets, how much you have compared to current liabilities. Normally a ratio 2:1 what indicates the kind of liquidity. Or a quick assets to current liabilities. Quick assets are current assets without the inventories. The next ratio what is called is also return on investment, how much profit you made compared to investment. Like that, many ratios are made to indicate the health of the financial status of the organization. Now there are certain accounting concepts which are followed. So first concept is what is called business entity. That means entity is different from owners. Second concept which people use is money measurement. Every transaction has to be measured in rupees, monetary terms. Third concept what is used is the cost. Actual cost incurred only can be considered in the financial statements. Next concept what people use, fourth one is going concern. Concern will be there eternally. Next concept is what is called dual concept. Dual aspect is basically for every debit there is a credit, and it is assets is equal to liabilities plus reserves and equity. Whereas accounting conventions, one is consistency. In accounting you have to be consistent. For example, valuation of assets have to be consistent at the actual cost, at the market rate or what it is. Second convention is disclosure. You have to disclose in these financial statements significant issues, particularly if they are materially significant. Conservatism is another convention where window dressing is not permitted. Next convention what is followed is relevance. Relevant cost and relevant income has to be considered. Next one is objectivity. It has to be unbiased when you are recording and transactions. Next, I would like to share with you is my experience. My experience, though I am an engineer, but in MBA Ahmedabad, I learned accounting from a book How to Read a Balance Sheet by ILO, and then I took accounting courses. Later I joined Lupin, worked for 3 years in sales accounting. Sales register, debtors ledger, general ledger, all that bank reconciliation, I was doing it in the absence of computers at that time. Then I went to corporate finance for 2 years, raised long-term loans from IDBI, ICICI, raised convertible debentures from public in 1992. Then I was in Sibagagi doing the planning, either it's 1 year planning or the long term planning, preparing budgets and reporting variances. So according to me, anyone who aspires to become a CEO, he has to have a good amount of deeper appreciation and knowledge of finance and financial statements, which truly helps him build a successful career.